Hi, welcome back, everybody. I'm here with Laura Bruno from BlackRock, and we'll be joined shortly with Omar from Deutsche Bank. But very glad to have you all here for this discussion about exploring careers in finance. We get so many questions about, okay, I want to do finance. Now, what do I actually want to do? Like it can mean so many different things. And we found one of the best ways to help students is to just give them insights into what it actually means to be on a specific path, to hear about different roles and to hear about different people's journeys. So Laura is an awesome mentor on Odyssey. So glad to have her part of the community and very glad to have her here today. So thank you, Laura, for showing up. Great place to start is to just to hear a little bit about your journey. If you want to start at maybe undergrad and just how you got where you are and what you're actually doing on a day-to-day basis.
Yes, and thanks so much for the invite. I know I've spoken with probably some people in the audience, but it's great that I think Odyssey's been doing a great job with, especially in the finance world, of trying to help people navigate this. Before I start, I do want to say I do work for BlackRock, but I do not represent BlackRock's views, and nothing that I say is investment advice. Maybe that's first intro to finance. Lots of things have to be caveated.
Yeah.
So when I was an undergraduate, I went to a small liberal arts college right outside of Boston called Wellesley, and I studied math and Italian. Those were my two majors. And I figured out by my senior year that I wanted to do something that was quote unquote business. And to me, that meant either finance or consulting. And the only job that I could get, that I could actually even get as a senior in college, because I had no experience in my internships in either of those, was a rotational program with State Street. State Street's a custody bank and an asset manager. So we'll talk a little bit. I do want to talk about the ecosystem of finance, because as Brian just mentioned, there's a whole universe of different areas where you can find roles and start out and then shift and kind of move around. I knew nothing about any of it. So I had the first 2 weeks was what was called financial boot camp. And it was a review for most other people. For me, it was entirely new. And I kind of floated through having no idea what the term fixed income meant, for example. I think overall, my journey, like in the first year and a half, was guided by that program, because it was a very structured way to get an introduction to State Street as well as to the financial services industries. And after that, I kind of figured out what I wanted to do and what I didn't want to do, mostly based off of what I realized I liked or enjoyed about my day-to-day. And I think that's probably, for the first 5 years of my career, that's how I navigated the finance industry. So realizing that I didn't want to be middle office, or that I did want to meet clients and go out and present, those were the things that helped me choose what next steps I took in my career. So I ended up joining a team that was kind of a consulting part of State Street, of the custody bank side. So custody banks, just to step back for a second, custody banking is essentially a bank for banks. So it's a third party investment servicer, as it's known. And we have a lot of relationships with institutional investors. So those are pension funds, asset managers, any type of asset owners like sovereign wealth funds, insurance companies, large institutions. And all of those clients are trying to grow their business. So the part of the consulting team that I joined was called Market Entry Solutions, and it was helping those clients understand how they could enter those markets and how they could grow those businesses. So I spent about 3.5, 4 years with that team, and then came over to BlackRock to do similar consulting style insights, but only in-house. So instead of having many clients that were externally, now I work at an asset management firm, which is also known as a money manager, investment manager. Those are all synonymous terms. And we kind of spread across asset classes, strategies, geographies. So I work with my colleagues internally to help them understand where there's room for growth in the industry and what our competitors are doing, where we can learn from our competitors, and where maybe we can pick up the pace. So that's just a brief intro.
Awesome. So many terms you mentioned to just kind of unpack, but if I would love just a high level for those who aren't familiar, how you would bucket kind of front office, middle office, and back office roles.
Yeah, I think they definitely depend on where in the ecosystem you sit in finance. So maybe if we zoom out further and just think about the roles that are particularly available for coming right out of undergrad, there are areas like trading. So that would be considered, I think, like a front office function. So those are the people that are actually executing on Bloomberg terminals, executing trades on behalf of clients, either at a bank or on behalf of an asset manager, for example. Similarly, there are sales folks all in the kind of global markets arena. There's also on the investment banking, more broadly on investment banking, there's kind of more traditional M&A, and that's a lot of building financial models. You're in Excel spreadsheets trying to value different clients, the businesses, potential acquisition targets. There's also kind of asset management. So if you're thinking about front to back office, the way that I typically view it is front office are going to be the folks that are client facing in whatever form that takes, depending on where in the ecosystem you sit. Middle office are going to be those secondary, more support functions. And then back office will be more of the kind of accounting, administration, much more in the nitty gritty, but very much behind the scenes. So middle office, I think we would include kind of compliance and legal, those types of functions, as well as some like operational functions in the middle office. But I think of front office as client facing. I don't know, Brian, if you would agree with that, if there's any other
I would agree. Although sometimes there's certain investment roles that are considered front office, but there's not, like you're facing a client, but you're facing the markets, like you're making the investment decision.
Mm-hmm. Yes, so maybe like externally facing.
Yeah, exactly. Great. Yeah, I like to touch on that type of stuff because it's easy to just kind of get lost and feel over your head. We have a question came in from Mohammed. Would you consider operations as a support function?
I think so. This kind of typically, I think the like overarching majority of the time, it would be considered, I think, a middle office function. A lot of times, though, when we say operations on the asset management side, like if you're working for a chief operating officer of a business, you're not front office, but you're a support function, but it's like a very critical kind of, you're providing a very critical business like to whoever you're supporting. So I think support can have like a very negative connotation in finance. And I strongly believe that everybody that's involved from middle to back to front office is critical to making everything work. So I would say yes, probably broad strokes, it's considered quote unquote support, but caveat it that I think there are a lot of roles that are really crucial. So I would steer clear of the like negative connotation of that.
Right, and it's so hard to bucket things and to actually have a hard fast rule for really any of these definitions, but they're just useful on a kind of high level basis. So given you found what you're really interested in within finance, are there any clubs or courses or specific activities you'd really recommend for somebody who's in undergraduate or graduate school, if they hear what you're doing, they're like, wow, this sounds awesome for me, that you'd really recommend for them to get involved in?
I think there are a lot of resources that I wasn't aware of when I was, and I didn't, because I went to a liberal arts college and I didn't go to kind of a more finance or business oriented school with that curriculum. I was very much new to all of it. And I think I would first off just say that a lot of things that you're going to learn in this industry, you have to learn on the job. So that's one thing that's like, which is an advantage, I would argue, for anybody coming from undergrad or grad school that feels like, I don't know anything about this industry. It's like, you know what, that's totally fine. What they're looking for are people that are really enthusiastic and eager and have done their own research as much as possible. So secondarily to that, there are a lot of great resources online. Investopedia is a wealth of knowledge to learn about many different aspects of the investment management and just finance industry overall. A lot of it is free. Some of it you can pay for. So if you really want to look into like specific CFA, the Chartered Financial Analyst programs or things like that, you can get kind of learning courses. Another free resource that I always recommend is the Khan Academy. And that has a very high level kind of 101 style overview of economics more broadly. And then you look at the subcategories and there's investment management. So different vehicles, like if you want to know what a mutual fund is, different asset classes. So what's the difference between equities and fixed income? And that's like a very cursory overview, but a perfect introduction for somebody that's interested in learning about this industry more broadly. And then in addition to that, I'll just add, nothing beats getting in there and really just diving into news and reading as much as possible. And a lot of the news sources are typical, like you'll have heard of them, Wall Street Journal, Financial Times, but there's even more that you will discover as you dive into it. And I think it's very much a muscle memory type of thing, where you'll see certain phrases and terminology within the industry that you'll continue hearing, and eventually you'll start being able to piece them together as you look something up on Investopedia, and then the next day you see something similar, and you can piece it together. So I'd say Khan Academy, Investopedia are great, as well as news sources to just orient yourself to the broader financial ecosystem.
I think that the muscle memory point is so huge, because there's such a behemoth of information out there, and the industry is just so wide that just diving into these resources, that over time you'll get much more comfortable, and that'll really show through when you are in your career search and having these conversations. Here's an interesting question we got, which was, how did your expectations of finance vary from the reality of actually working in it?
They varied quite a bit, and then they were also exactly what I expected in some cases. So I think number one of the biggest determining factors of your experience in finance is going to be the organization you choose to start your career with. That doesn't mean that they're the end all be all, and that's what it is, but it does mean that for the first couple of years, orienting yourself to how people work, the type of firm culture that you want to be a part of, the support that your managers give you, that's a really big and important part of understanding finance and of developing a career in finance. And I know a lot of people that kind of did 2 years, decided this is not the industry for me, or this is not the company for me, and then they start moving around and try to figure it out. So I think the best, again, like, internships are great introductions. They're like a sneak peek into a firm culture. So as much as you'll learn what seems like a lot during an internship, and then you'll go into your full-time position and you'll learn 1,000 times more in the first 3 months. So I would say, like, content wise, it's not as important to like get all of the knowledge or understand how to model or all those things, depending on what roles you're applying for. It's much more important that you feel that you can develop, or that you can explore things, or that you can learn about the industry and your role with the right team and with the right organization. And you can definitely get that sense from interviews, but more so from internships. And then obviously in the first 3 to 6 months of your career, I think you'll know whether or not it's a good fit.
Great answer. And actually we have the perfect question came in to kind of piggyback on that, because of how important those experiences are. How can students who are in their early college years get into the competitive internship programs, especially if they don't have what they would consider relevant experience?
My default for this question is to leverage your college alum network. There are going to be so many people that work in finance that are at your either undergrad or graduate university, which you can look up on LinkedIn, and some of them will kind of ignore whatever, if you reach out to them, but many, many people, the majority of times, will be willing to chat with you, will be willing to refer you and introduce you to other people. And it's just a really great way to not only get a competitive internship in some cases, but more so to narrow down your search. Because I think a lot of times the problem, quote unquote, with finance is that it's a very flashy industry. People think that it's a great way to just get a lot of skills, hard skills, really quickly in the beginning of your career, and you'll figure it out and it'll be great. And finance is not for everybody. Investment management, sales and trading, whatever aspect of it, it's really not for everybody. So I think it's actually important to talk to people that are in those roles, to talk to people that come from your schools or your backgrounds. If there's any connection that you have with people that you can kind of reach out to and leverage, I would encourage you to do that, because it'll help you understand whether or not this is really something that you want to start your career in. So to answer your question, I would leverage networks. And then I would also just start small. If you don't get the competitive internships, go and look at more boutique firms, smaller places where you might not necessarily get the big name, because I think people again got caught up in the big names. You might not get the big name on your between freshman or sophomore or junior, or even junior or senior year, but just getting experience on your resume is much more important than getting the name brand. So maybe start in your local city or somewhere. Just you don't have to be in New York to be in finance, right? So, or you don't have to work for Goldman Sachs. to be in finance or to be successful in finance. So try to keep the like name brand and city brand kind of behind as well. Those would be my two pieces of advice.
And great advice. And tactically, I think reaching out to the alumni at your school is really important. And you can search on LinkedIn and see who's connected. And you can always go on Odyssey and connect with awesome people who are there to help out and start building out those relationships. And we have a follow-up question on that from Elijah. So then would you say it's more helpful to focus on expanding their knowledge in other areas as opposed to finance specifically?
I'm assuming this means like a content perspective. So like, you know, you don't have to have your CFA type of thing. I think being a lot of different types of people will be successful in finance. I would encourage you at this stage of your like in college, most of the folks on this call, I presume, are in college, right? It takes a lot to be introspective and to really think about and challenge why you want to do something. So I think it will be more important for you to like literally make a pro-con list of the things you do and don't like doing on a day-to-day basis. If you're an extrovert and you want to be around people and you want to be talking and presenting and you just love the thrill of being in front of people, then I would definitely say, you know, try to think about roles that are like that. If you want to be in an Excel spreadsheet or you want to leverage, if you want to be modeling all the time, if, you know, depending on what you like doing, you can kind of tailor your searches that way. So I see that it says in terms of coursework. I think a baseline, there's no doubt that like a baseline of awareness about the financial services industry, about investment management, about economics is definitely advantageous, right? That's very helpful. It's also not critical. And I would actually think that it's more of it's actually like I was a math major and like I literally knew nothing about finance, right? And I learned it all on the job and it was totally fine. And I think more and more now companies are looking for people that have diverse backgrounds that aren't like the econ, macroeconomics, like double majors or whatever it might be. They're looking for people that are interested, that are like very passionate about learning, that are interested in the company. So the industry, starting at the high level, the industry, the company, and the team or the role. You have very specific reasons about why you want those. So if you love economics and you want to take 1,000 courses on it, that's great. And then you'll be able to narrow it down and you'll be way ahead of the curve once you start your first job or you take a role. But you can also do it and have a little bit more of a diverse background or different coursework, and you can very easily be an attractive candidate.
Awesome. Great answer. And we have a question about what led you to BlackRock in particular. They put it differently, but you know, how did you choose BlackRock? Like, why is this the firm? What about it?
Yeah. So maybe I'll actually use this as maybe a learning for those of you who aren't aware. When we talk about asset managers and we say large, that when you say like how big is your company, a lot of times in other industries that will mean either your sales or your profit or your number of employees or things like that. When we talk about asset management, one of the key metrics that's used is assets under management. So it means how many institutions and individual investors, how much investment money is under your fiduciary responsibility to manage on behalf of those people. What led me to BlackRock is I had been at State Street for 5 years, and in a millennial's mind, that's an eternity. And I realized that I had gotten a lot out of my experience there, and I had fantastic managers. I had a really great opportunity. I was managing a global team by the time I left. I felt like I had really like kind of squeezed all the juice out of it. And to my point earlier about like firm culture and everything and where I really felt like I wanted to grow my career, I wanted to look elsewhere to see what else was out there. And during my interviews at BlackRock, I happened upon, as I was kind of casually looking for new roles, I happened upon this role that I'm currently in, which felt like a very complementary next step to what I had known. So like the content and the knowledge that I had known. And it was the first time during an interview where they were asking me questions that weren't behavioral interview questions. And I actually knew the answers on my own without having to think about it because I had some type of knowledge base. And that was really exciting. It felt like that was so content-wise, it was the right decision. Based on my conversations with employees and based on my interviews, I realized that culturally it was a great fit. It's a very proactive, collaborative culture It's a fantastic place to work. So I'm going to plug Odyssey once again. I have office hours. I need to add more. I apologize, but there will be more office hours up. So feel free to reach out if you have any questions specifically about BlackRock.
Awesome. Thank you. And this is somewhat related to BlackRock, but just asking more generally about the trends you've been seeing in the industry and maybe how it's affected the firm or your role.
Yeah. Yes. So trends in the asset management industry. I would say that there are a couple that are kind of similar to what else we've seen around non-asset managers. And I think that some of those are, so client trends, you kind of break them out. We think about it as like client trends. So instead of wanting individual products, for example, clients are much more interested in like holistic solutions. And that's something that I feel like every industry has kind of started to figure out. So instead of saying that they want an equity ETF or an exchange traded fund, they'll say, my goal, my investment outcome is this, whether it's capital generation or capital preservation or income generation, whatever it might be. And now we're kind of working around that framework instead of saying, if this, then that, therefore this singular product. It's much more about solutions. I think similarly, power is shifting a lot closer to those who are closer to the end clients. So there are asset managers, which manage the investment products, and then there are wealth managers. Wealth managers are responsible for a whole slew of other responsibilities in addition to whatever investments their clients have. So these are private wealth clients usually. So wealth managers are responsible, for example, for financial planning, for acquiring new clients. They have a very different model than investment managers, which are focused purely on the investment side. So the power, quote unquote, of those relationships is really shifting towards the wealth managers because they're so close to those clients. I think another trend that I would highlight is value for money. So clients don't want to pay for investment products unless they're actually going to perform. So that's one of the reasons why we've seen such a boon in ETFs. So exchange traded funds instead of actively managed mutual funds. When I say active, I mean there's a portfolio manager or an algorithm that's trying to beat the market and trying to generate what's called investment alpha. I think there are obviously a lot of other trends, sustainability. So the growing, need for clients to have long-term sustainable investments. And it's become a central component of investing. And I think other things like the opening up of the Chinese market, which creates a lot of opportunities for global asset managers, which has historically been reserved only for Chinese asset managers. Yields are at record lows, which means that clients are looking for alpha and investment returns elsewhere. So a lot of private markets, so that would be private equity, private debt, infrastructure, real estate. That's where clients are turning to find those yields because they don't get them from their fixed income products because of how low the interest rates are. So there's a lot of industry trends. All of those affect BlackRock and our strategy directly, but I would be happy to talk more about that if people have specific questions on office hours. I see that there are a couple more.
Yeah, can we squeeze in another question? I know you had a hop.
Yes.
We had a question on how do you pitch, an astrophysics major when you're talking with a hiring manager?
Okay. You're an astrophysics major, which means that you have a lot. I would imagine that you've done quite a bit of problem sets, quite a bit of solutioning. I think this is actually one of the easier things to pitch because of how different this background is and because of how different the thoughts are in the way that you've learned and the way that you've been taught to think. So from my background, like math, we did thousands and thousands of problem sets every day. And it was essentially a structure where you're given this set of definite, rules that you can work with, and you literally have to problem solve, right? On paper. So I think that teaches you obviously certain logic and problem solving, but more so the important part of your narrative, right? I have this background and I learned all of this content. It's more about pitching it as the way that you think and why that's a different way of thinking, or why your way of thinking is something that's additive to wherever you're applying. The more important part of that, so there's I'm an astrophysics major, and I know that doesn't fit the bill in terms of econ or finance or asset, whatever it might be, but I think really differently, and I think that would be a great addition to your team. The reason why, you may ask me, why are you interested in asset management? Why are you interested in finance? The reason why is going to be the most important part of your answer. So like I said before, you should have a very clear answer of why this industry, why this firm, and why this team or role. When you're talking about each of those three answers, that's for every interview that you go on, any industry, whatever. When you're talking about all of those answers, they should be specific and unique to you. That means that you need to do a lot of introspection and really think about and do research on the industry, the firm, and the team to understand why does it fit, right? And what I mean by unique to you is one of the most common things I'll hear in interviews is when I ask why BlackRock, is that exact is actually the question. It's, well, you're the world's largest asset manager, so I really want to work at a firm that can take advantage of that scale. And that's true. It has many advantages, it has some drawbacks, but that's not unique to that candidate. Everybody gets to take advantage of those, right? So what I would want to learn more about is maybe you really care a lot about retirement. Maybe there's a personal connection, or maybe you did a research project for a class and you say, retirement and savings and what your firm has done in this innovative solution. And, you've done your research. So maybe you plug that innovative solution that you recently read BlackRock announced, which, by the way, there's a hint about that. There was an innovative retirement solution that we launched today. So maybe you've done your research and you connect it to something that you've worked on in school or a personal connection. Maybe specifically that's the why BlackRock. Maybe on the industry side, there could be a whole other slew of reasons, but it's about having your narrative and knowing that you really stand by it and that you've been really thoughtful about it.
Love that answer. Very actionable, very insightful, and a perfect place to wrap this up. We're at 4:00. I just want to thank you so much, Laura. That was such a great discussion, and thank you for filling the time. We were supposed to have another panelist here, so I appreciate you going one-to-one with me.
No problem. I appreciate everyone dialing in. Thank you so much. And like I said, feel free to reach out if you have any questions or you want to connect. I have plenty of office hours. Awesome. Thanks, everyone.
Thank you, Laura. Have a great day.